exploring your options towards quality retirement, brought to you by Union Bank. My name is Shijola Wahab, and I'm from the Union Bank team. For many of us who are approaching retirement age, the future might seem rather uncertain, and with the unprecedented negative impact of COVID-19, there are now even more questions to be answered. What investment or business opportunities should you consider now? How can the financial decisions you make today help put you on a more stable footing tomorrow? Without further ado, I'd like to introduce our speakers for today's session, who will help answer a number of these questions and point us in the right direction. Babajide Shiwoku. He is a financial advisor and business development manager who partners with groups and organizations for financial planning, career mentorship, and business analysis. Mary Oduemi. She is the head of investment sales treasury department, Union Bank PLC. Ashish Mishra. He is the divisional head retail business Alliance Nigeria. Before I hand over to them, a bit of housekeeping. If you have any questions during the session, please click on the Q&A tab and type your questions. We will have a question and answer segment right after the presentation to attend to them. Now, moving on to the presentation. First, we have Babajide, who will be speaking on retirement goals options.
Morning, everyone. As I was introducing, my name is Babajide. So I'll just be taking us through what I think everybody should do when they're getting ready for retirement. Basically, one of the major reasons for me when we're retiring is to ensure that we maintain the kind of lifestyle we're living while we're still active, and also not to create any form of financial burden for our children. So not to create what is called the black tax for our children. So that's one of the major reasons why I think everybody should be well prepared for retirement. Now, I just want us to answer this fundamental question and just answer it to yourself. So what if anything goes wrong now, you're currently working and your employer says, yeah, you know what, I don't need your services anymore. Do you have enough savings to at least take care of you for the next 6 months? All right. Have you ever sat down to think of what you're worth financially? Now, also imagine this, that from the very first day you receive your very first paycheck, the very first, some of us have worked 10 years, some 15 years. Imagine if you have been saving a minimum of 1,000 naira every month. Just check how much you will have saved over time, not even considering the interest element. So that's one of the major things that we need to note and we need to do when we're planning for retirement. Now, with all this COVID coming up, people are losing their jobs. And in the midst of that, it also created opportunity. Realize that lots of people right now are doing online business. Everybody now is selling food online. Everybody's going to the market for someone. So in that means also, there are also opportunities that came up. And another thing that I try to do and mention to people, yes, there's a pension for most people through the pension PENCOM that the government created. But as much as possible, also create something for yourself, to ensure that you're getting ready for the retirement. I'll go to the next slide now. So these are some of the things that people do on a regular basis, that take up their money. Family upkeep, you want to pay school fees, hospital, retirement plan, emergency. Everybody has different things that take their money depending on their lifestyle. All right. So we need to have a proper budget for this. I'll give an example of school fees. Most parents will tell you that, okay, I want to pay my children's school fees. I'm waiting for one big bonus that is coming, or they're paying me a bulk sum that is coming. In most cases, those things doesn't allow you plan well. So there are different things that you can do to plan for your children's school fees. You can sign up an insurance scheme. You can set up a savings plan for your child based on the age and the school you want to let the child go to. And your retirement, you can keep putting something aside. For me, for example, I have three different savings plans. I have the short-term savings plan, I have the medium-term savings plan, I have the long-term savings plan. What my short-term savings plan do for me is it takes care of my day-to-day needs, my immediate needs. And medium-term take care of my projects. All right, and my long-term will be intact for my retirement when I'm ready to retire. That's the only time, that's the only reason that I touch it. And I try as much as possible to put my long-term in FX. I try not to put my long-term in Naira. And my long-term doesn't just sit there. I put it in one investment or the other so that I keep, producing itself. And that's besides, the pension that the government has created. So I try as much as possible not to focus myself on that, right? Because that one on its own, you don't have full control over it. Probably when you first retire, you get 25%, then 50%, then you start getting the balance on a monthly basis. So try and ensure that you put something aside at least on a monthly basis. Like I said, you can break it out into three. You can do the short-term savings that should take care of your immediate needs, the medium-term savings, that you take care of probably your project, your short project, you want to send your son to school, your kids to school, you want to buy a car, and your long-term savings that should strictly be for your retirement, all right? And ensure that you have like an Excel sheet that breaks down all of those things, that you do on a monthly basis. I'll give you an example. I have a budget for entertainment, and whatever I don't spend on entertainment for a particular month, I carry it over to the next month. All right. So once you come to my house, it's what I have that I'll offer you based on my budget. So whatever that is less, I carry it over to the next month. All right. So I'll go back to the next slide right now. So what are the things for you to do? So what's your current net worth today? So you have to consider how long have you been working? Based on all the years that you work, how much are you worth? Just check the total asset that you have, including your clothing, your shoes, anything that you bought with money, value everything and subtract it from how much you're owing anybody. And that is how much you're worth. By the time you check that, you will definitely know where you are. And that will be an eye opener for you to, think extra and start working an extra. The day you understand this is the day you understand why you should start really planning for your retirement. Because if you're not planning for your retirement, you have technically created liability for your kids. And I keep telling people, whether we like it or not, anytime we grow old and stop working or die, as the case may be, you will leave either of two things for your kids, asset or liability. You must leave one. You can tell your kids that, look, I have this amount in this bank, I have this amount saved here, I have this investment here. Or you can tell your kids, please don't go to that house, I'm owing them there. Please don't go to that bank, I borrowed money, I can't pay them. So you have to leave something for your kids. So that technically depends on you. Then how ready are you to start business? There's so many things that you can invest on. One of the things I do is to put money into properties right now, because that's the only thing that can actually protect you, because you can actually also make both rental income and also property appreciation if you put your money in property. But you have to do your proper due diligence to ensure that the property that you're buying is genuine. And now, if you're buying properties, as long as that property is not generating additional income for you, it's a liability. It is not an asset. Because anything that goes wrong in that house, you still use your personal fund to fix it. It's only when a property is generating additional income, that is when it becomes an asset. And when you're doing such, you also need to consider where you're putting it. You need to check the area, whether it's going to be property appreciation or just rental income that you're acquiring. I'll give an example. Properties on the island, VI, Lekki, Ikoyi, they've almost reached their mark. So the rate at which they will appreciate is different, but you will enjoy good rental income if you have a house there. So if you have a house in the upcoming suburbs, all right, you might not enjoy as much rental income as you enjoy in those areas, but property appreciation is sort of guaranteed as development comes to that area. So for instance, if I buy a land, an empty land secured in one area, I will not leave it there just like that. I can look for somebody that wants to farm on it and allow the person to be farming on it, that the person gives me return on whatever he farms on it or whatever the produce is. I'll also use my intelligence to help the person build. So the person is working, making money. I'm also making money from the lease of the land or something, or put somebody there. If I rent a house, if I buy a house, for instance, I will ensure I'm getting rental income from the house while the property is also appreciating. And when I tell people this, most of the things they tell me is that I don't even have the down payment to put as equity for the house. And what I tell people is that you can do what is called an SPV with a very close friend that you know, that's special purpose vehicle. And what that does for you is that you create a special purpose vehicle and both of you can come together and buy a property. I've done this for some people before and it's really working out well for them. So what I did for them was with the help of a lawyer, they created an SPV. Both of them, brought their money together, and the money from the education, and they took a loan and they bought a property. So, and the rental income from the property was, subsidizing the mortgage that they were paying, and the mortgage was also appreciating. And right now, from there, they bought another land together, and that is how they kept on moving. So, and you also need to have alternative plan. So what are alternative plans? For me, what I tell people is the best way to start a business is to create it out of your passion, what you really enjoy doing, what you love doing, because when you start it from the beginning, it's the passion that starts it. And then when the passion goes on, now you start making money from it. All right. So, and again, your investment, how well have you built them? What are these investments? I'm sure some, my fellow panelists is going to come in and talk more about investment, but when you are investing, you also need to understand your risk level, and you also need to understand the reason why you are investing. Like I said, for me, all my long-term savings are always in an investment. It could be in a fixed income when I get, coupons on a regular basis. It could be, so you need to understand your risk level, and that will determine where you're going to put your investment. Another thing is insurance, right? Insurance is also very, very critical as a form of retirement plan. All right, you can put your money in an annuity where you be getting some money. And another thing that is very critical that people don't, that I do is, like for instance, now my parents are insured, my dad, my mom, everybody is insured. So if anything happens to them today, I don't need to start running around looking for money. All right, insurance company will, pay me or something like that. So that is also part of it. So whatever happens, I already have plans for it at any point in time. So how long can your savings last right now? You need to check that if anything happens to me today, or if my employer tells me to leave work today, what I put aside, how long can it last me? That's a reality check. That's a major, major reality check. Consider what is going on right now. Some people lost their job. Some people are asked to receive half salary and all that. But in that means as well, there are lots and lots of opportunity. I know people that started cooking for people online. I know people that started going to, because it's not everybody that wants to go out because of COVID, right? So we're like, what, let me go to the market for you. And people are still making money from you. So you need to think 10 years ahead. You need to have a 5-year plan, a 10-year plan, a 15-year plan, depending on what you want to achieve and depending on what you want to do. I'll go to the next slide now. So what are the opportunities for you to do? Like I said earlier, leverage on your passion to create an opportunity. Like for me, I like playing soccer. I love football. All right. Because the fact that I love football, I can think around it and create something around it. I love property. I love mortgages. All right. I love investing in property. The fact that I, like it, I can, create something around it. Right. Like I said, there's opportunity in logistics, agriculture. If I have a chance to buy a land somewhere around Moe today, I'll not just leave it fallow or leave it there. I'll fence it around, look for somebody that will probably want to do a fish farming or somebody that will probably want to farm something on it. And we both, work together. And you can also go to the rural area. There are people that have expanse of land, but they don't have funds to, cultivate that land, or they don't have the technical know-how to bring what they have down to the city for them to sell. You can invest with those kind of farmers and, lend your expertise to support them. Digital mentorship. I'm a fan of LinkedIn. So lately I came across what is called Cloud Advisory on LinkedIn. And what that does is once you register with them, you create your profile, and from your profile, company around the world contact you for advisory, and you make money at the comfort of your home. All right. You could also check that out. It's on LinkedIn. It's called Cloud Advisory. So there's so many things that you can do to prepare, for your future. The only thing that will last you beyond your retirement is your passion. Whatever you're passionate about, learn how to create money out of it. And that will, give you a very good retirement. Like I said, if you have a very good retirement plan, you have technically reduced the financial pressure on your kids. Imagine you're retired, you don't have a roof over your head, you don't have any form of investment, you don't have any savings anywhere, and you have a child that just finished school and just started his first job. The child is trying to settle down. He's trying to pay his rent. I also need to look after you. Try to pay your own rent, because as we grow older, our earning capacity reduces, our energy reduces, our ability to earn reduces. So this is the time. So what I tell people is that right now we are working for our money. All right. By the time we are retired, our money is supposed to be working for us. But that depends on what we're doing now. Now that we're working for our money, you need to put those funds in such a way that by the time you are retired, you are relaxing and those funds are the one working for you. So that actually depends on how well you've planned your retirement. Like I said, we all have different lifestyle, we have different risk elements, and those are also things that you need to consider when you're planning for your retirement. Next slide. So this is the final video I'm going to leave you with. And this is what I do when I'm budgeting, all right? And I also, consider the 50-30-20 rules, and this is also part of it when I'm retired. I also consider the 24-hour rule. So I'll tell you what the 24-hour rule does for me. So the 24-hour rule is when you see something, it stops me from doing spontaneous buying. When I see something that I really like, all right, I will go back home, sleep over it. If it's still on my mind the next day, that will determine whether I should buy it or not. In most cases, we'll buy something we don't need, but something that we want. This little video will help you separate your needs from your want. That's another challenge. People are unable to separate their needs from your want. That is why anytime you get a salary increase, your expenses quickly grow up to meet that increase that you have. That's because we do a lot of spontaneous spending. We don't plan our spending. We don't use the 24-hour rule. As you see it, you just buy it. Most cases, once you see it, you think you like it, go back home, sleep over it. That will tell you whether it's, is actually a need or a want. And this will also help you plan for your retirement. Retirement planning is extremely important. And as much as possible, as you're planning your retirement, also plan for your health, because the cost of our health also increases as we grow older. So those are the things you need to put in perspective when you're applying for retirement. So you can play the video now. This also tells you how to plan your budget. Thank you.
Thank you so much, Babajide. That was an informative piece. Thank you very much. Next, I'll hand over to Mary Odremi, who will be speaking on investment opportunities in Union Bank. Over to you, Mary.
Good morning, everybody. Thank you so much, Babajide, for that wonderful insight into the need for us to be investment ready. Thank you so much. Good morning, everybody. My name is Mary Odremi, and I'll be talking us through the various investment options that are available. But before we get into the different investment options, I would like us to quickly look at the importance of matching our investment goals, matching our retirement goals to our investment needs. And what do I mean by that? Most of the time, for most people, when we want to buy an investment, the first thing that comes to mind is, what's the return on that investment? What's the interest I'm going to gain on that investment? But there are other important things to look at, like, what's the tenor of the investment? Does it match my investment plan? What's the risk associated with that investment? Am I someone who's interested in low risk investment or high risk? What's my risk appetite? So that these are things that you consider before buying an investment, not just the return that the investment will give you. on this slide, you can see that on the left side, we have what we call defensive assets, and on the right side, we have what we call the growth assets. Defensive assets are those assets that give you fixed return on your investments and ensures that your capital or your principal is guaranteed. They include things like your treasury bills, your time deposits, your federal government bonds, and things like that. On the right side, we have what we call the growth assets. Growth assets are those assets that do not pay you fixed return on your investment, but rather the return on the investment grow over time. But there's a risk with regards your principal being guaranteed. So there's a higher risk when it comes to the growth investment. It doesn't mean that they are not safe. Like Jide mentioned, do your due diligence, understand what your investment plan is before you consider which of this investment to buy into. Next slide. Okay, so before I begin to quickly analyze the different investment options, there are some tips I would like to share that you should consider before choosing an investment. And the first one is identify your investment needs and goals. What's your plan? Are you looking at something short-term? Are you looking at something medium-term? Are you looking at something long-term? What's your risk appetite? These are the questions you need to ask yourself before you buy into any investment. Don't just buy an investment because someone told you about it or because the investment is available. Another tip is for you to have an investment plan. Jide has told us the different plans he has with regards in investments, investing in Forex, investing in real estate. Have a plan before you start investing. Know the amount you want to put in short-term investment, in medium term, or in long term. Know the risk that you're willing to take before making those investment decisions. And the third tip is to diversify. Always diversify. Different investments have their different risk and their different benefits. Diversification helps to make sure that if there's any unforeseen circumstances or foreseen issues that come up with a particular investment, the other investment that you have will help to cushion that effect and ensure that you do not completely use your principal or your capital. So it's important for you to always diversify. And the last tip is to review periodically. I'm not saying stop watch, don't check it every day on a monthly basis, maybe on a yearly basis. Any investment that you have done, give it time to grow, give it time to nurture, to mature, and review to see if it's meeting your investment plans. I will give you a personal experience that I had. There was an investment I did. It was like a 7-year investment. And, you know, I kept on reviewing on an annual basis to see how the investment is going. But it was going fine the first year. It was going fine the second year. By the third year, when I went back to review that investment, I found out that the company was having issues. And I immediately terminated that investment and got out my capital. For though I'm sure there are people who did not monitor their investment, by the time they go back, that probably that company has completely gone down and they would have lost their capital. So it is important that you periodically review your investments. Next slide. Okay, so these are some of the investment options that we have put together for you, some defensive investment options that ensures that your principal is 99 to 100% guaranteed. There are so many other things you can invest in. There's real estate, there is stock, there is commodity, there's agriculture, so many things that you can invest in. But the idea is review your risk appetite, review what plan you have with an investment before you decide to go into that investment. But these ones are principal proof. Your principal is secured, your returns on that investment is fixed and guaranteed for the period that that investment is running. So it's important that you have some defensive investments, even if you're going to also have those of growth. The first one we're going to talk about are the bonds, specifically the federal government bonds. Bonds can either be sovereign or corporate. Sovereign are the ones issued by the federal government, and that's where we're going to focus on. Federal government bonds are debt securities issued by the Debt Management Office on behalf of the federal government of Nigeria. What that means is when you buy bonds, you're simply lending to the federal government, who has agreed to pay you a fixed interest rate over an agreed period of time. Bonds are risk-free, So your principal is guaranteed. And there are two ways you can invest in bonds. It's either you're buying them from the primary market or you're buying them from the secondary market. The primary market is the initial offer when the bond is first issued, and the secondary market is when the bond is already existing. For both bonds, you can go through your financial institution to buy any of them. For the primary market, when you're buying bonds, the minimum amount is 50 million naira. But if you don't have up to 50 million naira, you can buy from the secondary market. You can go as low as 1 million naira. The good thing with bonds is they are also tax exempt, unlike your regular fixed deposit where you pay withholding tax. There's no tax on your bonds. And then your coupons, which is called interest, are paid twice annually. That's 2 times a year. So you can plan around your coupon. Plan your cash expenses around your coupon. You can plan it for payment of your rent, payment of your children's school fees. You want to plan that in vacation, or you want to use the coupon for another kind of investment. So bonds is a very good option to consider when you are making an investment decision. It's important that you have a bond. Bonds are usually medium to long term, so they run as long as 5 years to 20 years or longer. And the returns on bonds currently ranges around 2 to 9%, depending on the tenure of the bond. Another good option are commercial papers. Just like the bonds, commercial papers are debt securities issued by large corporate organizations to raise funds. So when you buy commercial papers, you are simply lending to the corporate entity that has issued that commercial paper. There's some risk associated with commercial paper, but they can be considered low depending on the company that has issued the commercial paper. So there are some blue chip companies that can issue commercial paper, and you're comfortable that your principal is guaranteed. For commercial paper, just like bonds, you can get them at the initial offer or at the secondary markets as well. A couple of companies have issued commercial paper in the last couple of months. Dufil has issued, Nigerian Breweries have issued commercial paper. Currently, MTN has a commercial paper in the markets. The initial offer has passed, but it's still available in the secondary markets. So if you're interested in any of those commercial papers, you can reach out to us. Union Bank has investment advisors that can guide you in making these investment decisions. Commercial papers are short-term. They're not like the bonds that are long-term. The longest tenor for a commercial paper is around 270 days. So if you're looking for that short-term investment that will give you reasonable returns, commercial paper, it's a good option. They are usually issued at a discount, which means that you get your interest upfront, and the risk are fixed as well. Another good option is the SENC-linked collateralized funding. It's also a fixed income instrument that also guarantees your principal. The risk is 0 to none on that paper because you can buy it through Union Bank and you're guaranteed that your principal is secured and safe. It is also tax exempt, just like the federal government bonds and the commercial paper. And the tenor ranges from 90 days to 365 days. So these are good options for you to diversify your investment portfolio, and you are sure that your principal is secure. There's nothing for you to worry about. Another good option is the foreign exchange deposit. Babajide mentioned how he also invests in foreign exchange. There are some of us who have access to foreign exchange. Maybe we're getting paid in foreign exchange, or we can have access to foreign exchange. This is also a good opportunity for you to invest in a foreign deposit. You're earning your interest in foreign currency. It's also, the risk on this investment is also free because you can also buy them through Union Bank. They're issued by Union Bank, so it's risk-free. Your principal is guaranteed. Your rate is fixed throughout the tenure of that investment. So it's another good way for you to diversify. Another fantastic option are the Euro bonds. Euro bonds are pretty much the same thing like the federal government bonds. The only difference is they are issued in a currency different from that of the issuer. Just like federal government bonds, Euro bonds can either be sovereign or corporate, but our focus today to minimize the risk will be on the sovereign bonds. Nigerian Euro bonds are issued in US dollar. And just like the federal government bonds, Euro bonds pay you coupons twice annually as well. And this is in foreign currency. You can also buy them from the primary market or the secondary markets. The minimum investable amount for Euro bonds is $200,000. But if you don't have $200,000, Union Bank has made it possible for you to start with as low as $20,000 for certain bonds, and it's subject to availability as well. They're also medium to long term. So if you're looking for that long-term investment towards your retirement, that your principal is secured, your returns are guaranteed, Euro bond is a very good option. Earlier in the year, maybe around April, the returns on Euro bond rose to as high as 13%. Imagine getting to 13% on dollars. That is a fantastic return. But with time and with demands, the rates have gone down a bit, but it still ranges between 2% to 8%. So it's still a fantastic option for you as well. They are risk-free and they are also tax exempt. Next slide. Okay, so Babajide also talked about the importance of having an emergency fund, having, a savings account, a go-to fund to meet your daily need, your daily expenses, your healthcare needs. You can't take out these monies from your long-term investment. You can't take them out from your medium-term investment. So your short-term investments are the only places that you can run to for those emergencies. And Union Bank has several savings accounts that can meet these needs with reasonable returns. The returns on this savings accounts ranges from 3.9 to up to 4.2%. When you compare this to your treasury bills that is currently around 1.2 to 3.4%, these accounts give you a reasonable return on your investment. So these are good options for you to put in your everyday cash, your daily savings, your monthly savings, as you build it up into buying those long-term investment that you're looking at. Slide. And finally, I have put up some strategies that are key when you are buying investment. It's not just okay to just wake up and decide to buy an investment just because a colleague or a friend told you about it. It is important that you have a plan to minimize your losses, to minimize the risk that you're taking, to ensure that your principal is guaranteed, is safe. So these are strategies that you should consider when buying an investment. The first strategy is to speak with a financial advisor. A lot of us may not be savvy about how investment works. Some of us are just used to the traditional savings or the treasury bills, but there are so many options out there, and you need to talk to a financial advisor who will guide you, who would run through your investment plans with you and tell you the best option that suits your financial goals. Union Bank currently has financial advisors that you can reach out to at no cost that can put you through and help you plan your retirement goals. Another strategy is to buy bonds. Buy bonds. Bonds are very key. Bonds are very important. They meet your long-term goals. The coupons from bonds can take care of, some expenses that may arise, like I mentioned, paying your children's school fees, paying your house rent, things like that. Bonds are key. And once you've locked up the bonds for 10 years, 15 years, 20 years, the return on those bonds will not change. Whether rates are going down in the market, once you've locked in those bonds, you are guaranteed those rates. Earlier on in the year, around January, February, return on federal government bonds were as high as 12%. So imagine if you had bought a bond at that time and locked it in for 10 years. Now rates are down to 1%, 2%. Those who have locked in their bonds are not bothered about that. They are still getting their 12%, their 13% until the expiration of those investments. So bonds are a good option. And then keep some safe investments. We talked about savings. We talked about emergency funds. Have these accounts that you can run to for emergencies. But Babajide mentioned, if, for instance, you lose your job, do you have a fallback cash that can get you through the next 6 months? If you had made an investment in real estate, or you have bought shares, are you going to start selling your shares to meet your daily needs? So keep some safe investments that you can easily access. And last but not the least, keep your expectations reasonable. Keep your expectations reasonable. we all know what rates are in the market right now. So someone coming to tell you, oh, there's this investment that is returning 12%, 20%, ask yourself, what is the risk associated with that investment? Is it a risk I'm willing to take? Is my principal guaranteed in that investment? So keep your expectations reasonable, and then you'll be fine. Thank you.
Thank you very much, Mary. I'm sure our audience was able to glean a lot of insights from that session. Up next, we have Ashish Mishra, who will talk to us about insurance as an option. Over to you, Ashish. Ashish.
Can you hear me?
Okay,
Hello?
yes, we can hear you now.
Yeah. Thank you so much, Srijola, for inviting me. And thanks to Babajide and Mary. Very, very insightful session I had. A lot of learnings, a lot of avenues to invest into through Mary I got to know. And certainly I would be contacting Mary soon for some of my investments over here. Now, as an individual, two of the biggest uncertainty in our life is living too short. Now, the problem in living too short is when we are growing up, we are planning for the next, after education, getting a job, getting married, getting children, raising up the children. And during this time, there could be a lot of hardships. Few of us go through, maybe the loss of a job, maybe the critical illness, which is becoming the way of a life. Critical illness is one of the COVID-19, like what we are seeing it. There could be the unsettled loans and the liabilities. Accident has become the daily way of a life. Like, in Lagos, each day I get to hear so many accidents and people losing their life, or maybe, getting disabled. One of the biggest thing which has happened over a period of a time is with the advent of technology, the average life expectancy has gone up. The average life expectancy till yesterday years was less than 55 years, which has gone to beyond 60 years. And by that time, many of us who would be reaching 60 years, the life expectancy could be beyond 75 years. And if we have not planned the retirement, then the retirement could be very, very difficult, because number of years what we have to live without any paycheck could be as high as 20 to 25 years, right? Next slide, please. Now, next slide, please. Yeah, thank you. So what we have seen is in the previous generations, right? People getting retired by around 50, 55. The urbanization was not there. People used to live in a village, and it was a happy, peaceful life. They did not have much of a aim and ambitions. But in today's generation, the time has changed, and it has changed a lot. First and foremost, it becomes as the lifestyle what we have been maintaining, till now. And after retirement, one of the aim has to be to maintain the lifestyle. If it's whatever we have been used to live it. There could be a lot of dreams which we carry, like going for our vacations and so on and so forth, or pursuing our hobbies, as Babajide has mentioned in his presentation, and it requires money, right? Biggest factor would be the health, protect health. Health is going to become very, very expensive. The health inflation is the highest across the world. It is the highest. The health inflation is almost like 30%. And then Babajide also talked about, whether you want to leave a debt or you want to leave a, asset for your next generation. So leave a legacy. That is the least what we can plan while we are working. As I've talked about the health cost, inflation is going to be one of the very, very big factor. Now, the chart, if we are looking at it 20 years down the line, whatever we require today to live our life, we will require minimum 5 times of that money. And that is just, calculated at an inflation rate of 15%. Also think about it. Women have got a higher life expectancy than men, right? And if we leave early and we have not made, enough of provision for a better half, how the lady is going to live without money? So there are a lot of if and buts which we have to actually, see to it that retirement, we start savings. We also saw it in a video that minimum 20% of our saving we need to do it. That goes by the thumb rule. And if we are unmarried, at least 40% of our income must go towards the savings. The benefit of starting early, the investment is you require a small sum of money to make a bigger kitty. And at a later year, you can still, because there is no time, it's never too late to start planning, right? But at a later year, you'll require a higher sum of money to achieve the same dream, what we need to do it. So it is, if you start early, can you get into the next slide, please? Yeah, thank you. So, if you start early, choose an asset allocation, which we have seen, like Mary had been talking about. There are the assets. Babajide also talked about whether it is real estate, whether it is, so many instruments which Mary spoke about, which bank offers, and then the insurance is also there, right? Equities are as well there. So, choose the asset allocation depending upon your risk appetite. Which again, Mary, mentioned time and again, but never compromise with your contribution. That is something which is must, which need to go it. And that is where insurance plays a very important role, because it gives you a disciplined way of doing the investment. You have to pay the premium on, month on month basis, or, any other mode of premium if you have chosen, whether it is quarterly or half yearly or yearly, right? By the time you are into 50s, you need to catch up with the contribution and see whether, how near you are to the goal and how much more contribution you require to reach to that goal, what you have dreamt about. And, you need to devise an income strategy which would outlast your retirement reserves. That is very, very necessary. Next slide, please. Now, Allianz, next slide, please. Allianz had done a survey. There was a Allianz pension indicator. Now, some of the facts which Allianz found it out, I would like to share with you. Nigeria has got the youngest population all across Africa, right? Our old dependency ratio is 1.64. That is out of each 100 people, only less than 2 people are dependent on the children. So we have got more of a younger population. The current level of the public debt on the federal government is extremely, extremely high, and the retirement age is 60. That means the current pension system which the government has, right, it's going to be unsustainable for the government to provide the support to the old age people, right? And also, we need to understand that we do not have any public pension system. It's an only occupational pension system, right? That means, less than 5% people have got the access to the occupational pension system. And that means each of the individual need to create that kitty, whether, they are into, they have got an access to the occupational pension system or they do not have, but they need to have the alternate kitty which need to, committed. Pension reform of 2014 in Nigeria, it speaks only about the formal sector. And, we all know that more than 50% of the population in Nigeria is from the informal sector. And there is no formal pension scheme system for those informal 50% of the people. And that means, each individual need to, create a plan for the pension or the after retirement age. How would they sustain, and not only for themselves, but they need to also think about from the spouse perspective. So the last slide is, what I would just like to tell is, look at the return on investments. There are various vehicles available. Your capital must be guaranteed, which, in many of the instruments, what we saw, Mary talking about, the capital is guaranteed. Insurance is one of the vehicle which, ensures that during the fortunate time, if everything is good, your capital is guaranteed and there is a moderate return onto your capital. And during an unfortunate time, in case if something happens, if it is bound to happen, right, and no one knows, that is the biggest uncertainty in our life. The higher of the sum assured is available for you, for the family to sustain. So that becomes a very, very important vehicle for us to invest into. We need to invest into the annuities so that the guarantee would be for the lifetime, lifelong income. Because once you invest after retirement into annuity, it gives you an opportunity of regular income. The various modes are available, and you can choose the mode to last your lifelong, right? I would really urge every one of us that retirement requires a careful planning. It requires a person who has got a good financial knowledge. We can have the experts like Babaji Day, who are at a personal level, they provide the expertise. We can have the organizations like Union Bank or Allianz. We are equipped to give you a proper guidance as to where all you should invest. And we saw that never invest into one kitty. You need to invest into the various kitties, so that if one place the investment goes soar, at other places you will continue to get a return. Thank you so much.
Thank you so much, Ashish. That was a very insightful session. And we'll be moving to the question and answer segment right away. I can see quite a number of questions that have come in, and it is time to respond to them. Please remember to keep your questions brief and concise so we can take as many as possible. We will also be running a poll to find out your level of interest in dealership or distributorship opportunities and your preferred option among the brands featured, the brands you can currently see on the screen right now. If you have the opportunity to be a dealer or a distributor with them, would you take it? That is part of the poll we'll be having. There will also be a separate poll to receive your general feedback on this session. Please take a minute to respond to the questions to the poll when they pop up on your screen. Thank you so much. Now to the questions. So our first question here says, I was into treasury bills investment in the past, but due to low interest rates, I stopped investing in it. What other investment opportunities in the banking sectors, and how can one determine an investment company to invest in? Okay, this person wants to know the other opportunities apart from treasury bills and how to know a company to invest in. I think Mary can take that.
Okay, I'll take that. Okay, so just like we listed on the screen, we provided several options, which is why we didn't even include treasury bills at all, because we're aware that almost everybody is familiar with treasury bills. So we've mentioned the federal government bonds, we've mentioned the commercial papers, we've mentioned the SEC-linked notes. So we provided several other options that you can choose from. So if, for instance, you're considering, let's say the commercial paper, because the other ones, federal government bonds, like we mentioned for the federal government, and you can access that through Union Bank. The SEC-linked notes are also internal to Union Bank. You can buy it out as where your capital principal is guaranteed. But for the commercial paper, which you can also buy through us, but like I mentioned, if you're buying commercial paper, you are lending to the corporate entity. So I know the concern would be, which corporate entity am I lending to, or how am I comfortable that this corporate entity can repay me my money at the expiration? It's important that you do your due diligence, check the track record of that company, their audited financials. How long have they been existing? What's the track record of this company? Have they been posting profits over the years? And like I also mentioned, you can talk to an investment advisor. We can run you through, we can do the due diligence and give an informative advice to help you make that informed decision. If we look at this period during the pandemic, some businesses have completely gone down, while some other businesses have even thrived better. Take an example like the FMCGs. Those businesses have thrived better. I will give an example with maybe Dufil, who makes Indomie noodles. This period, I am sure that in every household, we have purchased noodles. Even if we're not eating it directly, our children are eating it or our nannies are eating it. You can imagine the amount of noodles that have been sold this period. So anybody that doesn't even have money to cook a pot of soup or a pot of stew can easily afford 20 naira Indomie noodles. Another sector that has thrived this period is the telecom sector. We have constantly bought recharge card during this period. We have constantly bought data during this period. So you can imagine how much those companies would have made during this period. So if I hear about such a company floating a commercial paper, after I have done my due diligence by going through their financial records, I would be a bit comfortable to buy into that company's commercial paper because first of all, it's short term. So I'm confident that the chances of them going under within that short term is pretty slim. So those are the things you consider. So you can talk to us. I'm sure CJ will provide our contact and we will give you more advice and how to go about your investments. I hope that answers.
Thank you so much. Thank you, Mary. There's still one other question here for you. Is the interest on bonds paid yearly or paid at the end of the whole tenure?
No, like I mentioned, the interest on bonds called coupon are paid twice a year. So every 6 months, 6 months from the date of the issuance of the bond. So if, for instance, the bond was first issued today, July 30th, 6 months down the line, you'll be paid your first coupon. 6 months after that, you'll be paid another coupon. It's only your principal that you get as the expiration of the investment.
Okay, thank you so much. Another question on investments. With inflation rates around 13% and dollar exchange rates approaching 500 naira to a dollar, what investments can I activate that will beat these figures?
Okay, I pretty much cannot pinpoint one particular investment that will beat that, except you are going into something really high risk, like you are doing. Maybe you're going into real estate, or you're going into shares and equities, which is why we advise that you diversify so it can cushion the effects. Inflation rates are really high, they're around 12.45, 12.5 as we speak, while interest rates on deposits are low at 1, 2, below 5 and the rest. So to pinpoint one particular investment to beat inflation rates is pretty difficult, but you can combine and spread out your risk and then balance it out a bit.
Okay, thank you so much, Mary.
Sorry, Shiju, can I just add to what Mary has said? So
Okay.
in that regard, like Mary said, there's really nothing to pinpoint that will be the inflation rate, but you can get investment that will reduce the impact of the inflation rate on you. So it can reduce the impact, but there's nothing that will give you like that will give you above the inflation rate. She also mentioned, properties and any other thing, especially properties. So you can buy properties, like I mentioned when I was talking, when you're buying into a property, you need to consider 2 things. You need to consider the property appreciation and the rental income. The combination of the 2 together might reduce the impact on inflation on your income.
Thank you. Thank you so much, Babajide. Then we also have questions around insurance, Mr. Ashish. The first one says, is there a particular insurance package for one at this stage of life? Secondly, do I really need insurance if I will be saving so much?
Thank you for the questions. Yes. So for the first question, now at this stage of our life, I do not understand what is the age the gentleman would be trying to mention it, but I am assuming that the person would be at a senior age. So, the age of the maximum age of entry into an insurance product per se is limited, right? It would be around 54, 55 years. That's the maximum age by which you can enter into insurance. And you can enjoy the benefit of investments till 60, 65 years of your age. That is there. However, there is a product called personal accident, which does not have any age criteria. Now, having a personal accident policy is it's not actually a life insurance, but it covers the biggest of the hazard, that is the death due to the accident. In case if it has happened, the particular sum assured gets paid to the family. The premium amount is very, very tiny. You know, it would be, approximately around 1,000 naira or less than that per month. That's all for around 10 million cover. That is one. Now, the second question, what has been asked is, after doing so much of investment, do we require insurance? Yes, we do require insurance. Because, during the period, as I said, that during the building up period, we might have purchased a house, we might have taken a loan, right? Even after doing the investments, at any moment of time, if I am cutting off the investment, what I might get would be the principal or some bit of a interest onto it. But the liability towards the liability side, the liability which, if I'm going to die too young, right, which I would create for the family would be too high, right? And as Babajide said, that what we want to leave, a debt or a asset to the family. So insurance covers from that hazard, right? Insurance is one of the very important tool among various investments, which you would have seen it during the presentations. But it is one of the most important tool, and it's a must-have policy into everyone's life. Thank you.
Thank you so much, Ashish. So there's another question here which I will answer. The person says, is Alliance in collaboration with Union Bank? So Union Bank has bank assurance opportunities available. Alliance is one of our bank assurance partners. We also have Cornerstone as well. So you can go to any Union Bank branch and say you want to get a bank assurance product. That is the collaboration between a bank and insurance companies. Basically, the insurance company reaching you through your bank. So they are bringing it home to you. So if you're interested in any insurance products, feel free to visit our branches and tell them you want to enjoy a bank assurance product. Also, there are some questions around how people can enjoy services even after retirement. I'm proud to tell you that Union Bank is one of the very few banks, if not the only bank, that offers loans to pensioners in the country at this time. So contrary to the regular information and happenings around that, people tie loans around your salary. Even after you retire, you can still get a loan from Union Bank as long as you're getting your pension paid here with your Union Bank account. So there's another question here I think Mary or Jide can help us with. How adequate do you think the savings product mentioned can help achieve a substantial retirement plan? The savings, putting little money aside, how adequate do you think it can help achieve a substantial retirement plan?
Oh, very adequate. You know, the saying where, we're familiar with that says, little drops of water make a mighty ocean. That's how your savings account is. You will not believe what you can do with your savings until you are dedicated. You make that dedicated decision, like Jide mentioned, every month, put aside something into the savings account. Just keep putting it aside. Give it some time. Give it a couple of years, and you'll be amazed at how much you would have put together. There was an investment I started. I think I was paying about 15,000 naira every month. You know, when they told me about that that investment, it was like a savings account. At that time, I was like, okay, I just wanted the marketer to just get off my back. So I said, okay, I'll do 15,000. And I kept on doing that every month. And in 10 years' time, when I checked that savings, I couldn't believe it. My 15,000 had run into millions of naira. It was shocking because when I was deducting 15,000 naira from my salary every month, it seemed very insignificant. But over time, it had grown into millions of naira, and I was really proud of myself. So it's never too small. It's never too late to start. Just start now and just keep putting it aside and you'll be amazed.
Okay, let me also add to that, Shiju. So when it comes to savings, you need to know what you're saving for. Like I said, you have to have your short-term, medium-term, and your long-term. And I'll use my example. So my long-term, I started buying dollars when dollars was around 360, 365, and I was keeping dollars aside on a regular basis, on a monthly basis. And when you save for long-term, don't just leave the savings there. You put it in an investment based on your risk appetite. So I was putting my dollar savings into a dollar mutual fund. And at that time, it was giving an interest of 7%. So today, I understand dollar is about 470 naira to a dollar. So imagine how well I protected my funds, and imagine the interest that I've accrued on those funds when I was saving dollars on a monthly basis at the rate of 360. And what that also does to you, there's what is called law of averaging. So you buy today 360, buy tomorrow 365, you buy next tomorrow 400. By the time you average it out, you're buying at a lesser price. All right. So when you're talking about your savings, you need to know the reason for those savings. If it's your short-term savings, it's for your immediate needs. For your medium-term savings, it's for your projects. And for your long-term saving, it's strictly for your retirement. And your long-term savings should not be left idle. It should be put in investment based on your risk appetite so that it can generate more. Thank you.
Okay, thank you very much, Babajide and Mary. And that is the last question we can take on this session. For further information inquiries, please feel free to reach out to us through any of the channels you can see on the screen. You can contact us by email or telephone. Our contact details are currently showing on the screen. Thank you once again for joining us, and have a nice day.
Thank you, everybody.
Thank you.
Thank you.
Thank you.